I think that the market needs to think where we were a week ago, and a week ago things looked pretty good. And then one tweet changed everything, and now we're so focused on central banks. I would actually argue that it's not the central bank issue now. This is actually about, in 25 days' time, whether President Trump chooses to go ahead with tariffs. If he does, then I think we've got a major currency war on, because I think that the retaliation for tariffs is clearly a very clever move by China by targeting their currency in around 7. So to me, you've got 25 days. I think the president knows that. If you look at his history this year, you had a 4 to 6 week shutdown over in Washington. Then he had the spat with Mexico. That was 3 to 4 weeks. And then you had the issues early summer threatening more tariffs on China. He tends to fight for 4 to 6 weeks, and then he does a deal. And I think ultimately diplomacy will occur or not occur at the end of this month between Xi and Trump. I think they'll have a Sunday afternoon call where either something happens or it doesn't. But this, to me, is not about central banks anymore. This is all about a trade war. Okay, so let's talk about this morphing into a currency war, as you talk about. I know the kinds of people that you speak with, Paul. I know how closely you watch the flows in the currency markets. Is there an expectation among those that you follow, speak with, and see the flows around that the Chinese currency is going to go even lower? Their view right now, and my view as well, is that this thing is on a cliff edge. And again, it's down to Trump. I'd say that overall the bias has shifted. They're very concerned that things will deteriorate between the U.S. and China, and hence, we'll get a move to 740, 750 in the yuan, right. And that would be a disaster for currencies globally. My personal view is it won't happen. I think that the U.S. and China will get back to speaking. But the risk is inevitably there, Scott. This reeks of 2015 again, and we know what that did to the market.
Yeah,
so
we do.
Huge nervousness.
We certainly remember the summer of 15. Bank of America is talking about that today, about that level if these tariffs go into effect, Steve.
Yeah, I think that one of the things we make a mistake in is trying to talk about market reaction as a logical set of linear functions. You get dislocations like this, Scott, and I don't want to go back. Well, I guess I need to go back and recall what happened in 08 and 09 when things blew out that seemingly had no relevance or connection to anything. You have dislocations here. You have big moves in yields around the world. Maybe this is all visible to us, what's happening, which is a rally in bond yields and a fall off in stocks. But maybe there's other stuff that goes on in the repo markets and in the plumbing of the financial system that gets dislocated. Those are my concerns.
Yeah,
and I don't think those are entirely
that's a dangerous scenario
concern.
that I don't think people are prepared to want to deal with.
I think that underlies the trade here a bit. Yeah. You have this kind of dislocation in markets, and you cannot know everything that's going on all at once.
Paul Richards, thank you for calling in. We'll talk to you again soon. Wanted to get your thoughts on the currency market.